What is up YouTube? Welcome back to the AlphaFX Academy. In this video we're going to talk about three things. The first one is Fed Chairman Jerome Powell's speech in the Jackson Hole Summit last week. The second thing is what effect this speech had on the financial markets, and more importantly what effect this speech had on the gold USD spot market. And the third thing is, as every single week I'm going to give you a full analysis and breakdown about the gold USD spot market, showing you the things you need to look out for, all the possible scenarios and how you should trade gold. And I'm also here to help you to better understand technical analysis and more importantly price action trading. So if you're ready, stay tuned, it's coming. Before we start with the analysis and the video, I wanted to take the time and say congratulations to Dave. Dave is one of my good friends and one of the best US 30 traders in the members area. And Dave got married last week, so I wanted to say congratulations to you if you're watching this video and your beautiful wife. I wish you all the happiness, success and also a lot of profits in your future trading career. Congratulations Dave, well done. Moving on, Jackson Hole happened last week, Friday. Jackson Hole Summit is one of the most influential, prominent and most prestigious economic summits in the whole world. And the history of Jackson Hole is going back for decades, where some of the smartest and most talented financial investors, economists and CEOs are meeting in Jackson Hole. I think it's in Kentucky. And they're meeting for a whole weekend discussing the most current and most pressing economic issues in the financial markets, in the global economy, etc., etc. So you can see that the importance of Jackson Hole is quite big, and it lived up to the expectations because there were many speeches, but we were focusing on one single man, my main man, Chief Jay Powell, straight out from the Fed. And the reason why it was so important, because usually Jerome Powell, the chief of the Fed, head of Fed, is giving mandatory statements about what goals they achieved in the economy, because you have to remember that the Fed is a independent institution from the government, and they have the whole sole responsibility is providing stability in the financial markets. And the reason why this summit was different, because Jay Powell was giving a speech outside these pre-scripted mandatory statements. So I was expecting that Jay Powell is going to give some personal opinion, which he did, and I'm going to tell you what he did. US stocks and government bonds rallied in response what Jay Powell said in the Jackson Hole Summit. The S&P 500 and the Nasdaq Composite Index rose almost 1.5% in one single day. And even the Fed speech affected the European markets and the Asian markets, because all the indices are closed higher and higher than the previous week. I could talk about hours about this statement or the speech Powell gave, because there were so many little things which are important, but I'm going to try to consolidate into, layman's terms, so the everyday person, or if you don't have any economic education or you're not economic savvy, that you are going to understand why is it important what Jay Powell said. So Powell said that the Fed had met the first two goals it wanted to achieve, namely for average 2% inflation before reducing its economic support. The second goal is for maximum employment, with him saying there was clear progress. However, and this is why it was important that we heard Jay Powell outside the usual mandatory statements. So Powell also warned against acting too hastily in response to the elevated inflation, noting that such a move could be particularly harmful given the world's largest economy was still fighting the effects of the pandemic. And this one sentence was important because Jay Powell actually said that the Fed doesn't care about inflation for now, because we know that inflation is going to be transitory. I said before, and I'm going to say it again, that transitory inflation doesn't mean that inflation is going to go away. It's the rate of change which is going to change. So for example, if the if the inflation is 5% now, and inflation is going to go to 2%, so it's going to dip next month, it doesn't mean that inflation is going away, it's the rate of change which is going to change. So prices are going to stay high. And with this sentence, Jay Powell actually told the markets that we don't care about inflation because inflation is going to stay with us. And this is really contradicting what the Fed said 2 months ago. If you remember, if you're watching my videos and if you're following me, you remember that I made a special episode about the Fed statement, and everyone was so hawkish. They said, oh, we're going to stop monetary policy now, we're going to have to think about increasing interest rates in the short term, which spooked markets. But with this statement, actually Jay Powell changed his attitude, changed his stance, and he told us that the Fed doesn't care about inflation right now. And Powell's speech being at the center of market attention. And there is a reason we're hanging on to this. The market is desperate to get some direction, some confirmation from the Fed when tapering starts. So Jay Powell said that the Fed is going to start thinking about tapering, or actually it's going to start tapering as early as the fourth quarter in 2021, or maybe a little bit earlier this week, which is the beginning of September, which is not a problem because, you know, tapering and increasing interest rate is two completely different things. And Jay Powell was really careful with his words, because he said that we're going to start tapering slowly. So right now they buying bonds for about $80 billion each month, and they're going to startly dewean the U.S. economy from this drug, because, you know, it's easy money for the markets. And the word that they're going to do is slowly actually calm the nerves. And the second thing, which was really important, that he said, we're not going to raise interest rates now. And this is really important because, as I said, it's two different things. Slowly stopping the tapering and increasing the interest rates, which is a more aggressive approach to control, you know, inflation and dealing with an overheating economy. So actually the Fed announced that they're going to choose the softer and the more calmer way to control the economy and the money supply. And I was very happy that he separated raising rates from the taper announcement, because it's a much higher bar to raise interest rates. And now we're going back to the analysis. So all you have to do is remember that the Fed is going to slowly start tapering in the coming months, and they're not going to raise interest rate in the medium or short term. So focusing on the analysis, you can see I send out, by the way, daily analysis to all the AlphaFX members. So if you want to have a look and if you want to receive daily analysis and setups and scenarios, just go to my website alphafx.eu, click on purchase or read about me, reviews, whatever you want. You can send me a direct message if you go to the contact button. So if you want to receive daily analysis on the gold USD spot market and also some major indices and currencies, then join the AlphaFX Academy. So going back to the analysis, you can see that we identified this descending channel, and when the price was here, I was expecting price to come down a little bit lower, retesting the 1760 area. But actually what the price did is, as soon as it reached the top of this descending channel, it just shoot up. So I had a losing trade right here because I was expecting a downfall. But then when the price went up, I stayed out of the markets a little bit because it was not what I expected. But when the price made a almost double top, so the second high was higher than the first one, then the price aggressively melted all the way down back to 1784. And this is where we had the buy limits ready, because using my strategy and the analysis I sent out, we had buy limits sitting at 1784 and 1783. You can see that the 84 was activated right here on 25th of August. You can go back to my free channel, by the way, guys. Link in the description below. If you want to join my free Telegram group, link in the description. So the first buy limit was activated here. Price started to go up and then came back all the way down. And this was right before Jackson Hole. And I reduced my positions because I like to reduce my exposure before any high impact news. So what happened on that day is obviously price came back down to retest this level, and I sent out a warning to the team members that please be careful because the price could go a little bit lower before it's going up. And look what the price did. It came back to test 1784 and came back all the way down to 1780. So what I did, and this is what risk management is, I increased my stop loss a little bit. So I reduced my position size and increased the stop loss. This was important because having a pre-calculated downside, it's important. That's what risk management is. Reducing the position before the high impact news, increasing the stop loss, leaving some room to wiggle. And what it did is allowed me to just sit patiently and wait what's going to happen, because usually before high impact news, price is more volatile. And look what happened. It wasn't as volatile as what I expected, but price came to retest again the top of this channel and then immediately shot up. So I had my stop loss. One was at 17.79, so it was almost hit, but it wasn't, thanks God. And my other one was well below the previous lows, somewhere around 17.75 or something. So what happened after is price shot up all the way to 18.04, and we closed really good profits. So many members profited from this trade. And then finally we had clear direction, because you can see that the price broke out from this channel, came back to retest twice, and then shoot back up. And every single impulse move is followed by a retracement. Remember these words, guys, because this is important. This is one of the 101s or the fundamentals or foundations of price action trading. So I sent out an other analysis. I tried to leave it in the video, so if I put it in the video you can see it right now. So the analysis I sent out is that I was expecting the price to come down and retest this main trend line around the 1785 area before it's going up. And this is where we're switching on to the forecast, guys. So what's happening right now on the gold USD spot market is at market open, price went up to 1822, came a little bit down. I sent out a sell position to my members. So the sell analysis was something like this, that the price would come back up to 1820 before it's going back down to 1795, 1799. But what's happening right now is it looks like that the price found some kind of support at 1814. So the forecast, here it goes. I can see two possible scenarios. One of them is that because we had a really impulse move to the upside, and we had the Jackson Hole Summit last week, and because we had the end of the month, which is the usual profit taking for all the traders, because they're closing positions, they need to carry the P&L to the next month, they need to start with a new P&L, fresh clean sheet. Usually they close down all the positions they had last week or last month. So what I would expect, today is Monday, today and tomorrow is a drop, because if everyone's closing their positions, or the most biggest traders closing their positions, price should come down. And you can see that if you use the Fibonacci from swing low to swing high, which lines up with the top of the trend line, and also look left, support and resistance. So what I would expect is a price to drop to 1799, but recently gold responds more or better to the 1786 Fibonacci level. So somewhere on this area, it's hard to tell right now, but the price should drop to 1799 before it's going its way to the upside. Let me just do another line. So the first thing is drop to the downside and moving up. And my initial target, what is this? My initial target will be at the 1860 area. So I could move this up here, 1850. Yeah, that should be reasonable, but I still think that the price should come a little bit higher. Now, the other thing is, before this impulse move happens, we have to clear. Oh, what's happening? Now, before this move happens, because price found support at 1814, and because price was really bullish last week, and also remember that traders in Asia didn't have the time to respond to Jerome Powell's speech, because 1:30 UK time was already the end of work in Asia. So what happened is Asian traders, I was expecting some kind of bigger bullish movement, because when they're coming back to the market, they're watching, they know what's happened on Friday with Jackson Hole Summit. So I was expecting some kind of more bullish move to the upside before the drop, but it looks like the price found support at 1814 area. So the other scenario which I can see, and it's highly possible, is that the price finds support and straight goes to 1850. Which one is going to happen, I don't know yet. I need to borrow my crystal ball from Zeph, but The really important thing is you need to watch out, guys, is obviously manage your risk and watch price action on smaller time frames. So whichever level is going to give us the entry, whether it's 1814 or 1799, I wanted the bracket thing. So whichever level is going to give us, and pay attention, do not leave, guys, because it's important. I'm going to show you how you should trade these levels. So we have three potential continuation levels, retracement levels, because every impulse move is followed by retracement. So the first one is 1814, second one is 1799, and the third one is 1793. So what you have to do is, I'm going to go down to your lower time frame. Let's choose the M15. So what you need to look for is, obviously you have one support level here, is the usual drill. You need price to break market structure. Market structure is broken when the price breaks the previous high, and then a retracement. Use the Fibonacci or whatever strategy you use. So price should come back here, make a new higher high, a bullish M pattern, and then when the third leg happens, or the second leg, whichever is your entry, or may you already entered here, when we see a bullish market structure in forms of, you know, higher highs and higher lows, what you need to do is get your trend line, put it up on the chart, and you know, trend line can be broken, but what's important is market structure. So here you can draw a trend line, and as soon as this trend line is broken, let me just do it like this. So if the trend line is broken, watch market structure. If the previous high is broken by a new high, so this is our new high, imagine that the price is breaking through the trend line, breaking the previous market structure, and then impulse move is followed by a retracement. So you have to get your Fibonacci or any other tool, and you find the retracement, which is the highest probability retracement, whether it's 61.80 or 78.60. Look left on the chart. If there is clear support and resistance, that is going to be the highest probability that the price is retracing from there. And then you're moving higher and higher again, adjusting your trend line. And simple as that, guys. You need to follow market structure. What if this fails? What if price breaks, you know, the support and resistance? It's not a problem, because then what's happening, we know exactly what is the next retracement level, 61.80, before it's moving up. So what you need to do, wait price to come down to the 61.80 level, and then what do? Again, watch market structure. Is the price making higher highs and higher lows? If it does, boom, you need to buy. And what happens if this level breaks? Same drill. You go down to the 78.60. We had the retracement levels identified in this video. I told you the exact levels. What you need to do is sit patiently and watch price action. Guys, this was the video for this week. Do not leave yet. Again, if you want to join the AlphaFX Academy, a free Telegram group, go to my or go to the description below the video. I give you a link to a free Telegram group, and also you can check all informations at alphafx.eu. If you get any value out of this video, please hit the subscribe button, hit the like button, and leave a comment in the video. Cheers, guys. This was the AlphaFX.